Hey everyone, welcome back to Corporate Decoder. Today, TOMZ just filed an 8K announcing a 1-for-3 reverse stock split, and I am seeing a classic pattern here. Quick note, this is not financial advice, just my take on public filings for educational purposes. We'll break down what this reverse split means for shareholders and look at the bigger picture for the company. So TOMI Environmental Solutions Incorporated, or TOMZ as it is known on the Nasdaq, has announced a reverse stock split. What does that actually mean? If you own shares of TOMZ, this means that for every 3 shares you currently hold, you will soon have only 1 share. The total value of your holdings ideally stays the same, but the number of shares you own decreases, and the price per share increases proportionally. This reverse stock split is scheduled to happen around the 20th of July. The company states that this move is to potentially increase the market price of its common stock to meet the minimum price requirements for continued listing on the Nasdaq capital market. It is a common strategy for companies whose stock price has fallen too low. Keep in mind, companies that do reverse splits often do so because they are struggling to maintain their listing requirements. It is also important to note that this reverse split will affect not only your shares, but also things like stock options and warrants. The number of shares you can get from exercising those will be reduced, and the price you pay per share will go up. This is to keep everything proportional and fair. The company is also making sure that no one gets stuck with a fraction of a share. Instead, if you would have ended up with a fraction, they will round that up to a full share. Currently, TOMZ common stock with the symbol TOMZ is traded on the Nasdaq capital market. It is crucial for these companies to maintain a certain stock price to stay on major exchanges like the Nasdaq. If the price stays too low, they risk being delisted, which means their stock would only trade in the much less liquid over. The counter markets severely impacting its accessibility and liquidity for investors. Now, let's consider the context. TOMZ operates in the pollution and treatment controls industry. Their market cap is currently around $5 million, and the stock has been trading around 69 cents. This reverse split aims to boost that share price. Looking back, companies that undergo reverse stock splits, especially smaller ones like TOMZ, often face challenges. For instance, in 2021, Kodak implemented a 1-for-20 reverse split, and unfortunately, its stock eventually saw further declines in delisting. About half of microcap companies that do reverse splits eventually get delisted. Applying that to a hypothetical $1,000 investment before such a split, you might see that value drop by an additional 40% in the months that follow, turning your $1,000 into something closer to $600 or less. The company has reported some positive news recently, like a 124% year revenue growth in their preliminary Q2 2026 results, which is certainly encouraging. However, a $5 million market cap means they are quite small, and maintaining steady growth and profitability is challenging. The report is signed by Holden S. Shane, the Chief Executive Officer. While this filing is primarily about the procedural aspect of the reverse stock split, the underlying health of the company is what truly matters. The revenue growth is a good sign. But the need for a reverse split suggests that the market has not been rewarding the company's performance with a higher stock price, or perhaps there are underlying concerns about the company's long-term prospects that are weighing on its valuation. Ultimately, this reverse stock split is a tool a company uses to address a low stock price. It doesn't fundamentally change the business itself. The real question is whether TOMZ can leverage this to regain market confidence and achieve sustainable growth. The risk I am watching is whether this reverse split is a band-aid on a larger problem, or if it will genuinely help the company get its stock price to a level where it can attract more institutional interest and avoid delisting. What I'm actually looking for is a sustained period of strong financial performance and profitability that can organically drive the stock price higher without the need for such measures. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded, like, comment, subscribe, and join our Discord in the description.